No one knows how long the coronavirus is going to force large parts of the world's economy into lockdown for. But maybe financial markets are trying to tell us something. It's a huge economic hit in the meantime to industries across the board, from airlines to neighborhood restaurants. Financial markets don't really know what to think, especially with uncertainty over government bailouts and so on, but we took a look at what a 20% drop so far this year in the S&P 500 index of US stocks might be implying. It's a simplified calculation, but those 500 big American companies have lost altogether about $6 trillion in market capitalization this year. That's as of Friday. In theory, that ought to equate to a $6 trillion loss of profit. That's assuming it's a one-off. We assumed that companies try to keep ticking over and manage to avoid maybe a third of their usual expenses. Again, simplifying, that implies around a $9 trillion dip in revenue from the coronavirus. That in turn is about 3/4 of what the S&P 500 constituents were forecast to bring in for 2020 as a whole before all this started. Now, a 9-month total revenue shutdown seems rather pessimistic, but then again, to assume an immediate return to the level of revenue before all this started may be too optimistic. Still, it's just one way to evaluate what financial markets may be telling us about the coronavirus.